Very good evening, friends. This side Rahul Magan here is a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. Standing today on 28th November 2020, I am going to be shooting a very interesting video about the research which we continuously do on the various stock, But before I start the video, let me make one thing very clear that the data which we got is as per 26th November 2020. And if anyone after listening this video make any kind of assumptions and take any kind of position either on the buy side or on the sell side, this is definitely his or her call. As simple as that. Because one of the basic premise of understanding is that you need to understand the thing in a complete holistic way. That is really very important. We know that every market of the globe, especially the Asia Pacific markets, are having two set of investors. The one is the domestic institutional investors and one is the foreign institutional investors. Now, domestic institutional investors are those investors, those who are actually in their own country. Could be insurance companies, brokerage companies, government run, I would say primary dealers, and there are many, depend upon country to country. And foreign institutional investors are those investors, those who are wealthy investors. They based out US, London, different parts of the globe and wanted to invest in these developing nations or Southeast Asian economies to get an attractive return. By the way, if the Joe Biden will come as an American president, the probability is really very high, to be honest. And in that way, Federal Reserve might be hiking the rate. Another reason is that thankfully COVID vaccine is around us, at least we can say. And after COVID vaccine, Federal Reserve will definitely get an opportunity to increase the rate. And as of now, I have not seen that Biden would be opposing that. And if not, then maybe Federal Reserve will back to hiking gently, and that way the flow to emerging market might be reduced. But having said that, this is markets. Anything can happen at any given point of time. But this is what it looks like as of now, to be honest. When we speak about India, India is having both domestic institutional investors and foreign institutional investors. And importance is definitely both of them. And domestic institutional investors cannot be start without quoting LIC, Life Insurance Corporation of India. Government is really trying very hard to make sure that the Life Insurance Corporation of India, should launch IPO probably early next year, 2021. And the way markets are running, like Sensex is around 44,000, Nifty is around almost 13K, Bank Nifty is, I'll say this as 30K. I think the LIC will launch with a value of more than 100,000 crores. I might not be surprised that if the value is more than that by the time LIC will come into the picture, because I'm sure that by the time LIC will come into the picture, the vaccine talks would materialize to the larger extent. So that's very important. LIC IPO is on the cards, and I think LIC IPO itself is capable enough to lift the market sustainably. But let's see how it happens. LIC invest a very good portion in equity schemes. Everyone understand that. And they are the largest domestic institutional investors we have in India. But we got some data, and that is really a surprising data for me, to be honest. The value of the equity holdings of Life Insurance Corporation has climbed to a record level. At the end of September quarter, the insurance behemoth holding in companies to the top 200 stood at 77 billion, which means that in March 2007, it was around 25 billion, and September 2020, it is around 77 billion. That is not bad, right? But that is not what we wanted to discuss in this video. What we wanted to discuss in this video is that top buys and sells during September quarter. So we got this data, and I'm very surprised that, LIC increased the stake in Yes Bank by 340 bips, which is around 3.4%. And standing today, as we speak on 28th October or 28th November, the percentage stake is 5%. It means it was around 1.6 previously, now 3.4, total 5. HDFC AMC, they increased by 2.8% and it is around 2.8%, which practically means that HDFC AMC was 0, now they added it. Mahanagar Gas was increased by 2.6%, while total is now 4.2. It means there is 1.6% increase, while Ramco Cement is around 2.6 and it is percentage 2.6, which means it was newly added. Container Corporation increased by 2.4 and now the percentage stake is 4.4, which means very well. The decrease in shareholdings is Bank of Baroda, Dr. Reddy, Cipla, GMR Infra, Bears Corporation. I'm really surprised how come the pharmaceutical stocks are in the decreasing side. But maybe LIC having their own philosophy, so that we should not, talk a lot. But one thing that is really surprising me is the Yes Bank. 3.4% increase in September quarter. And one thing which I'm not been able to get an answer, to be honest, is that the percentage stake is 5%. Now that 5%, I'm really confused. Unfortunately, I don't have data, so I cannot be sure of myself. Is this 5% is the total corpus 5%, assuming the total value which they are claiming that September 20 is around 77 billion, the value of the data is 77 billion into 5%, which is around 3.5 billion something, or is it 5% of the total purchases done in September quarter? That is really a confusing point to me. I repeat, is this 5% is the total 5%, or is it 5% of 5? Is it 5% of the September quarter? And if it's 5% of the September quarter, then very important thing is how much buying happened in September quarter. That we also do not know because there is no data. Since there is no data, but there is a bit of data that since April, LIC pumped around 55,000 crores, in this in the markets. During the last year period, LIC invested 32,800 crore, which means LIC is approximately closer to very, very not far from double, to be honest. But nowadays we are getting very good news of Yes Bank. Like one side, Yes Bank is cutting the cost, very good news. Yes Bank quarterly profit is good, is in profit. Quarterly report is in profit, which is not bad. Yes Bank wanted to sell the bad book or bad loans, that is not bad. Yes Bank is trying very hard in getting some or other form of partnership with the insurance companies to sell insurance products, not bad. And more importantly, now the Life Insurance Corporation of India increased the holding in Yes Bank by 3.4%. That's really very interesting. But before we go very happy, we need to just see that things are moving in the right direction, but the journey is really, really long. Please don't be in a mindset that the journey is really very comfortable enough, or that it is very easy for anyone to to assume that the job is done. It is not yet done, because the mess which was created earlier was not an easy mess. It is the big mess. Similarly, this time also the destination is little long. But good thing that Life Insurance Corporation of India is coming as a helping hand for Yes Bank, and Yes Bank himself is doing all the good work to be in the action soon. Let's see how things shapes up, but Treasury Consulting is definitely keeping an eye on all the research, and we are also updating our members and also to people on the YouTube that how things are happening. But one thing which is really sure is that, before we conclude, we need to look at this thing in a very holistic way. Maybe a few months from now, any foreign institutional investor will invest the money. We don't know. Maybe some foreign bank will come and buy Yes Bank. We don't know. Maybe Yes Bank will come in the capital markets again and raise some money. We don't know. Maybe such kind of domestic institutional investors will pump more in Yes Bank. We don't know. But one thing we know is that as vaccine discussions are in advanced stage, and more importantly, the markets are in a positive mood across the globe, US, India, Europe, and everywhere. Once the vaccine will come on table, not sure when, but multiple articles on Google suggest that somewhere June 2021. Once it come on the table, then I'm sure that banking, aviation, hospitality, and real estate, the four distressed sectors because of coronavirus, banking, hospitality, real estate, and aviation, they will get a strong boom everywhere. But keeping an eye is very much mandatory, and that is what we are planning to do. And thank you very much for providing this data. These data are very, very useful, and they help us to do our research better. But they are selling pharmaceutical stocks. Really, that is, I think, point to think. Why? I'm not saying anything negative, but I'm saying that this prompted me to think why. And I need to work why, because this why might be beneficial for me and our hedge fund desk. That is. This is Rahul from Treasury Consulting. You know our WhatsApp 9818485155. Have a great time.